Hello, welcome to K.I.S. Services Strategy Review. Today we're going to go over September 9th, 2016 and show how good market state awareness and just focusing on the facts allowed you to participate in a big event in the market. So we can see on the S&P and the grid, we've got a market that's in a neutral digestive state. Part of this state is that the market is going to be, momentum is going to rotate. These characteristics are more sideways action, but one of the characteristics is that when we are in a neutral digestive session, it can be the precursor to a breakout. This coiling action can build power, and typically it's a sign that sentiment's going to change from neutral digestion to a trend, and usually this will happen early in the session. We'll get a signal that tells us, okay, we've been winding up and we're ready to make a move. And this is more prevalent when sentiment's balanced. So when sentiment is at the directional, R level is equal to the directional, it's more likely for this to occur, that we could have this breakout session. So it's always something to look for. And the optimal strategy is to fade the extremes, but the trigger for a hedge strategy theme, this breakout theme, is that it starts at sentiment. We'll get a trigger at sentiment, and then the big tell for that is no break in the positive or negative structure. So we're having expectations that if we get that, we could have this low volatility one-way trade for the balance of the session. Okay, these are just the facts of a neutral digestive market state with sentiment balanced. So if we're in a neutral digestive state, and if sentiment is balanced at the directional, then these are the optimal strategy themes, and one of the typical things that happens is we can have a low volatility one-way trade for the balance of the session after we get a breakout signal. Typically these breakout moves will happen early in the session, so we're going to pick up the session at just after the European Open, and we've got the market trading above the directional, so we're here. We can see the market's kind of going sideways, and we're trading above the market, so we're either looking for a move up to the upside pivot, or if we get a breakout here, that potentially is going to shift us into this hedge theme. And that's what happened. You can see how the market moves through the metrics. It's coming down here, testing, we're getting a reaction. I always like to have some simple moving averages running, and always looking for this if-then. If we can hold negative structure, can we do something? And so here we're getting a breakout signal. The market breaches the metric and it pulls back to the variance. So this is a sell signal here, and it's setting up this sell R breakout strategy. And the breakout signal follows through, and it pays out a full average price map distance. So from the directional down to the downside pivot, we have a full APMD, and as we're coming into this support area, we have a little bit of conflict. Are we going to bounce back into an optimal strategy theme, or are we going to transition? Is this hedge theme going to continue? And so at this point, we want to look at price structure, and if we have a market that's been holding structure, this aggressive negative structure, and we haven't seen a break in that structure, that can be the tell that we're in this theme. The other tell is that it's happening early. And so we've got this aggressive negative momentum, and here's 7 a.m. Central Standard Time. We're coming into the regular session open, and we've been holding negative structure. So that's another tell that we may be in for a linear event move. After the open, market price qualifies below the downside pivot, so we're generating a sell signal here. And what this does at this point, it negates this. This is no longer true. As soon as we fail here, the market is telling us we are no longer in a neutral digestion. This statement's not true. We're in transition, and we're in a hedge strategy theme. Are we transitioning into a negative situation, a new trend move? We're not sure, but what we do know is that we are no longer digesting. And so as long as this market is trending and holds that trend, that's our story. We're sticking to it. You can use some simple moving averages. Just literally watch negative structure. And by negative structure, I mean a market that's making lower move lows, lower move highs. And as long as we can continue to do that, there's no reason to think that this market's not going to continue to trend, especially when we're in a situation where we're in a breakout. If we break the second structure high point, that would be the tell that, okay, this negative momentum is over. But even here we can see, you know, and I like to look for alignment. So here's a nice alignment structure point where we have a impulse and it tops out right at the figure. So we have some good definition here. You know, when does this trend get broken? Well, the trend gets broken if we get back above the downside pivot. So until that happens, we're in negative mode. And now that we've failed from the downside pivot, that's given us another sell signal, and that sell signal translates to projects it down to 2145 and a half at least, because that would be a 2 APMD move for a breakout signal. And the market continues to hold negative structure. It held the metrics here, held these, you know, moving averages, and it's more important that it's holding market structure. So once it takes out this structure point here, the price qualifies below the downside target 1. We don't expect this market to come back above it. This is kind of classic, where it pulls back to the top of the metric. This is the top of the alert distance, and it holds it. You know, it's negative structure. We have a structure point here, we have a structure point here, and then the market fails here and it just gives it up. And so now at this point we're not anticipating this market to come back above this metric. And as long as it's continuing to hold negative structure, there's no reason to think that this thing's overdone. What can happen? You know, negative move in the S&P. We haven't had an event for a while. What if? You know, we've had this breakout. You know, we have an expectation that this can be linear one-way trade into the close. Let's see if it does it. And then here the market attains 3 APMD. So we have actually from the R level we've had a 4 APMD move. We're definitely in an event. But the key thing is it's performing to expectation, and literally just these little impulse moves. If you're trailing your stop, you can use kind of a dual stop placement where you're trailing the price action and you're also trailing market structure. So as you're coming into this area, absolutely you're tightening things up. It's the third objective. What's going on with the other indices, what's going on in the other markets, are we in an event? But as long as we're holding negative structure, there's no reason not to just continue to ride that structure. And here we price qualify below the downside target 3, and if we look at our price action structure, here's a high, here's the second high. So we come up and we breach this, which actually sets us up into this sideways digest. We kind of tap the brakes here on this negative momentum. Things cool off a little bit, we digest, and we can't get back above these metrics, and then the market gives it up into the close. But we had that that insight from the get-go where there is the possibility for this one-way trade, for that it can hold for the balance of the session, and that's what it does. The 2104.5 is the event extreme, so we fell just shy of that, but that can also be kind of the trade vision coming into the new session, and then it turns out that remains an important level, and it's coming in as the new session's downside pivot. This is a strategy-based trading approach, identifying the market state, identifying how the structure of that state is going to skew those state characteristics, and then because we're in that state and that structure, what are the strategy themes, and then being able to identify what strategy theme is in play. The market usually gives us tells. It tells us we're no longer in this optimal theme, this is no longer true, and then we can focus our attention on the hedge strategy theme. Is this in play? Is it going to play out? Are we just going to have a non-event day, or are we in the hedge strategy theme? If we are in that theme, what are the insights to that theme that we can look for? Keeping it simple, not thinking, focusing on the facts provides clarity and allows you to participate in some events like the one we saw in the S&P on the 9th. Any questions, please contact us at info@jsservices.com. Thank you.